Yeah, what's up, traders? I welcome you to another episode. My name is Sunday. If you have not subscribed to my channel, please do. That is the only way you can encourage me to keep uh, releasing this material free of charge. All right, so sit back, relax, grab your pen, your paper, and get a cup of coffee. All right, and let's hit the ground running. All right, today we are going to continue our topic, which I titled Market Structure. All right, if you're a beginner, don't worry. You go and watch my video from one. This is the 10th chapter, so that you can know what Forex is all about, and you can start, before you know it, you start trading on your own. All right, market structure, like I told you in my last video, market structure is the foundation of you being a forex market. For you to become a forex trader, you must know what market structure is all about. So when we say market structure, we are simply saying the framework, the general details, the attitude of buyers and sellers in the market, their activities, what transpired, what is happening between buyers and the sellers. If the buyers are more, you will see the structure will change. If the sellers are more, the structure will change. So if the buyers are more, will become bullish. If the sellers are more, will become bearish. So now the benefit of market structure. Why do we need market structure? Why do we need to understand market structure? Because number one, it enables traders, it enables traders to know the direction of trend. It enables traders to know direction of trend. All right, it enables traders to know direction of trend. That is the first one. Then the second one is market structure helps trader to identify trading opportunity. All right, this is what you look out for. You know, okay, there is time for me to get into the trade. All right, so let's go straight to more practical ways. All right, this is because this is the way you understand what market structure is all about. All right, so you see when you are going up like this, there's a pullback, there's a break of structure, there's a pullback, there's a break of structure, there's a pullback, there's another break of structure. All right. By the time you get here, you now see there's a little pullback. All right. What you should be expecting is for it to break structure, but no, it stops shy or it stops here. All right. It creates what we call double tops. All right. Or equal high. Then the market will have a pullback. All right. We have a pullback. Then a push to the upside. This time it will not get to this point again. All right. Then another thing you will now see is for it to now start breaking this structure to the downside. All right. Once that happens, all right, once something like this happen, all right, once something like this happen, at this point, we'll say change of character. We'll say change of character. All right, okay, I will denote it so that you understand. Now, this is the last low. You now see it will come, for example, it will come, now break this low, retest, break, pull back, break, pull back, then another break of structure to the downside. Now, what happens here now is that we now have two types of market here right now. A bullish, we have a bullish trend, then we have a bearish trend. All right. So from here to the downside is bearish. From here to the upside is bearish, is bullish. Now, what now happens? You see, normally when we are bullish, we continue to break structure to the upside. Break of structure, break of structure, break of structure. Now, price got here, it broke structure. Then there was a pullback. It was supposed to break structure to the upside because the aim of a slow is to break the swing high. Once a price action creates a support, the aim is for this support to break this resistance because this resistance supposed to break this support, but it failed to break this support because we are in uptrend. It failed to do its job. All right, because it failed to do its job, it failed to break this low. Now this low, this support, we have to take out this resistance. All right, by the time I will treat support and resistance, you will understand what I am saying better. But you must learn this so that you, all those support and resistance, other blocks and all that will just be uh, an easy flow for you. All right, so you need to learn market structure first. It's very, very important. So now we've been breaking structure to the upside, right? We've been breaking structure to the upside, but price action got here, it made a pullback, it created a support. Now it was supposed to break structure to the upside, but it created what we call equal highs. Or if you don't call it equal highs, you call it double tops. All right. Now it made a pullback. It did not take out this support. It pushed to the upside. It did not come to this level again. All right. It did not again get to this same high. You can see it made a push to the downside a little. This one is lower than these two highs. That is to tell you that something is about to happen. We call it change of character. Now, at this point, has the character changed? No. The only point where you will see the change of character happens is when this very one here, let me highlight it. It's only when this point is taken. Once you see a trend coming down to take out this low, if it comes down below this low, this last support level, we'll say that a change of character has happened. All right? We'll say a change of character has happened. All right? What do we mean by change of character? That is change of trend from being bullish to bearish. So you have, like what I said, it enables traders to know the direction of trend. That is what market structure does. Now that you are now seeing that instead of this support level to break the resistance, it created equal high, or you call it double tops, and is making its way to the downside. Once this level, this last support level, remember, all these ones are just a liquidity point. Everything that happens between this one here, this very point here, this very point here is what? A liquidity point. Understand me, guys. This is a liquidity point. What you should be concerned about is the last support level. Once this last support level is violated, we simply say there is a change of character. All right. Once you see that price action pulls below this low, all right, we will say change of character, meaning that the trend has left the bullish state to a bearish trend. We were bullish before, now we are now bearish, meaning that sellers have taken over. The process of taking over the trend from the process of sellers taking over or overpowering buyers is it only confirm when there is a change of character. All right. Once the sellers, they are able to break the last support. This is the last support that breaks the structure up. This is a strong low. All right. Once this strong low, which is the support, is broken or violated, we simply says that there is change of character. All right. Meaning that anything you want to do, you will be looking for an opportunity to sell the market. That is why we say market structure helps traders to identify trading opportunities. Now you've been bullish. All the opportunity you should be looking at is to buy. Now price got to this point, it created an equal high. You wait a minute, look at the market, observe the market, and you now see that the last low, which is the last support, has been taken, violated, meaning that this is now confirmed to be a change of character. And what now confirmed it is that after the change of character, there was a pullback, all right, then break of structure follows. This from here, you now say break of structure. One moment. From here, we now see a break of structure. All right. After you have confirmed your change of character, you now see a break of structure. So at that point, at this point now, all you should be looking for is to sell the market. All this while that the market price action is experiencing or going through the phase of changing character, you just need to wait without doing anything. All right? Because if you try to, okay, look at it this way. Price action has been breaking structure to the upside, and it got here after this last break of structure. Market had a pullback. It did not break structure up. So if you enter from here, what will happen? It will trap you. You think, oh, it's going up, but it will create another equal high. It will come down, create a low, then create a little high. Before you know it, there will be a sharp push to the downside that will now take this place as a liquidity. So it's a trap. Then you now see that this last support level has been taken. And once the support level, the last support level has been taken, all right, most people will say this is the last support. No. Price action can come down, sweep this place, and push start to resume again an uptrend. All right, thereby using this place, all these ones as a liquidity and all this as a liquidity. So you have to wait for price action to violate the last break of structure. The last break of structure. This is a support level that successfully broke a structure to the upside. None of this leg broke structure. So you should know that all these ones are just trap. All right. Once you now notice that there's a break of structure to the downside, how? Once the last support level is taken, you know that there is a change of character. You now see a pullback, wait for a pullback, then a break of structure to the downside. Now you can now say we are bearish. So market will now be observing the phase of what? Break of structure to the downside. You now see break of structure to the downside. Once there's a break of structure to the downside, you wait for a pullback. All right, you wait for a pullback. Then what you should be expecting, the next move is for a break of structure to the downside again. So once the flow is exhausted, it will experience again another phase of change of character before an uptrend will resume again. That is the flow of market. This is market structure. This is market structure. The aim of this high is to break this low. The aim of this low is to break this high. All right, is like that. This is how market structure works. Like I told us, is the foundation of trading. You must read this thing, understand it, so that by the time you open your chart, you should be able to say, okay, this is the direction of trend. You will be able to say this is the direction of trend. All right. So, guys, I think at this point you should know what market structure is all about. All right. Like here, we are now what? Bearish. All right. At this point, you should be looking, when the market is bearish, you should be looking for a selling opportunity. When a market is bullish, you should be looking for a buying opportunity. So, guys, I am going to stop here for now. The next chapter is going to be a bomb. So, go through this video. If you have not subscribed, please subscribe to my YouTube channel. Thank you so much, and God richly bless you guys.